Thank you for joining us. This is Business Incorporated on Channels Television. I am Bisi Adebayo. Coming up on the show, Zambia increases fuel price on higher oil prices and depreciation of the kwacha. And South Africa's unemployment rate falls to 26.7% in the third quarter of 2017. Plus, later on the show, a look at Nigeria's mutual fund market. Well, let's begin from the markets here on the African continent, where the Nigerian All-Share Index is trending lower by over 1% at intraday. The South African JSE is doing good at intraday with a 1.66% increase. Egypt was down 0.22%, while Nairobi closed in the red on Monday, down 1.21%. And Dubai stock market rose 0.8% at intraday on Tuesday after Emma Malls and RMX reported strong earnings, but most of the Gulf was quiet, though, gaining little momentum from the rise of Wall Street and other global markets. The Saudi index is down 0.11%, although Riyadh Bank gained 2.1% after reporting a leap in quarterly profit to 974 million reals from 293 million reals a year ago. Abu Dhabi's index also edged down 0.21%. The Qatar index was lower 0.63% at intraday. Now, European stocks hovered around the flat line this morning as investors monitored the release of fresh economic data and corporate earnings. Well, let's talk to Ulrich Bartz, my colleague at the Frankfurt Stock Exchange, to tell us more about how the markets are performing today. It's good to see you, Ulrich. So the market looks stabilized, but what should investors do first? If stock markets drop further, buy stocks on the dip, shift from equities to bond, or possibly hold tight and say, this too shall pass?
Yeah, it's a difficult decision. I'm not an investment advisor, a reporter, so I listen to the people who are supposedly in the know, and lots of economists and analysts are saying at the moment buy the dip. Because people have been waiting for a long time for this long, durable upward trend to relax a little so that those not yet in the market or not in the market as fully as they would like to be would have a chance to join at reasonable prices. That time is now, say these analysts, but of course there's always the danger that it goes down further, and then that might have been an erroneous decision. Going into bonds, it seems like a good idea at the time. The yields have gone up considerably, so it's more profitable to go there with less risk, of course, than with equities. But at the same time, should the reason for this dip in the market, the rising inflation, rising rates continue, then bonds you buy today will suffer in their price and be worth less to the investor who buys today. I think one thing that's worth mentioning, everyone you talk to here, at least I talk to, says that, you know, over the long run, equities are the best choice because they go up. If you look at long-term curves, they're usually on the way up. Dips in between, yes, but usually on the way up in the end.
Now, what earnings are making headlines in your market today?
I think an interesting one is TUI, the world's largest travel company. It's having its annual general meeting as we speak, and it didn't have a great last quarter of 2017, but traditionally for travel companies and also for TUI, it's difficult in the winter season. Sure, there are some cruise ship passengers, some passengers who are holidaying in the southern hemisphere, for example, in Africa. But generally, it's not as profitable as the summer quarters. So those figures were not great. But TUI says something that's remarkable and that's being received in the market. The bookings for this coming summer are looking very well, and even Turkey, which suffered huge setbacks over the political situation there, is also recovering.
Oh, on the data front, Ulrich, British inflation unexpectedly held close to its highest level in nearly 6 years in January, and that highlights the challenge of the Bank of England may face as it tries to return price growth to target over the next 2 years. But is this signal also worrisome for the ECB and investors in other parts of Europe?
No, not coming from Great Britain. Britain has its own problems. People know that it's Brexit-induced, and the fact that inflation is going up in Britain has to do with the tanking of the British pound. Investors decided, that's not what we need in our portfolio with the Brexit coming up. The problem is the same as in the euro or as in the United States, for example, inflation. But here and in the United States, inflation is going up because the economy is going great. In the United States, it's still going strong. You have basically full employment in the labor market. In Germany, same situation. And even in countries which were difficult, like Spain or Portugal, for example, here in the Eurozone, you do see an improvement of the situation. So yes, on surface, the situations look the same, and one might say, Great Britain is now looking at the perhaps next rate rise by the Bank of England, but people do see it as a completely different situation, and Britain itself and the pound are not big enough to move world markets today.
Thank you very much, Ari. See you again tomorrow. A recovery for U.S. equities is showing signs of faltering today as stock futures stumbled in early trade, with the Dow futures dropping more than 100 points. We're looking at the numbers, though. We see the Dow futures down to 24,414, while the S&P 500 futures lost 0.56% to 2,640. It's the same with the Nasdaq 100 futures, which were down 0.57% at 6,494.5 on Monday. The Dow Jones rallied 1.7% to 24,601.27, with 28 of the 30 components trading higher. The S&P 500 advanced 1.4%, while the Nasdaq Composite Index climbed 1.6%. Well, that marked the second straight winning session for U.S. stocks as investors went hunting for bargains after last week saw the biggest weekly losses for all three indexes since 2016. But the rebound continues in Asia as most markets closed higher on Tuesday. Japan saw some pullbacks in gains, though, where the Nikkei went from finishing morning trading up 1.3% to finishing the day down 0.6% as the yen saw an afternoon rally following stable trading throughout the morning. Elsewhere, the Hong Kong Hang Seng Index rose 1.54% as markets clawed back gains after falling into correction territory last week. Down under, the S&P ASX 200 closed higher by 0.6% at 5,855.9 as earnings season rolled on. On the mainland, the Shanghai Composite tacked on 1% to close at 3,185.6, and the Shenzhen Composite gained 0.41% to end at 1,730.83. The blue chip CSI 300 index finished the day higher by 1.19%.